crypto regulation. I've actually completely changed my mind on what I think will happen. Why did I do that? I'll show you exactly. If you look at consumers in the US, numbers vary a little by report, but maybe 16% own crypto right now, and 23% have owned within the year. That's similar to Apple Pay or Google Pay. But this is misleading, because this is the average of everyone, and this doesn't average well. 40% of millennials own crypto. And if you look in this report, investments that offer the greatest opportunities for growth, according to different age groups, ages 21 to 42, domestic equities 12%, real estate 28%, emerging market equities 15%, international equities 15%, ESG, tangible assets, and here comes cryptocurrencies, digital assets 29%. That's the highest of all these asset classes. And if you look in the Morning Consult report, we see millennials here at almost 30% and all ages with income 100k or more at a similar level. But if it's both, it's 64%. Bank of America, young investors think the greatest growth opportunities lie somewhere in the transformative digital asset space. Nearly half, 47%, have cryptocurrency holdings. And the richer they are, the higher percentage own crypto. Those with investable assets of 1 million or more, 83% of millennial millionaires own crypto. So among young people with money, almost all of them own crypto. Millennials see crypto as the most promising investment class. Then why is crypto not higher up on the agenda among commercial banks and politicians? It's because of this. The majority of wealthy individuals, boomers age 56 to 75, 62%, Generation X, the best generation, age 43 to 55, 20%. Only then comes silent generation, 75 years plus, and millennials, which is only 9% of wealthy individuals. And because of this, asking if they understand cryptocurrency quite well. Ages 21 to 42, 64% say yes, ages 43 plus, 12%. And a good guess, it's a declining curve with age. So the traditional financial system can afford to not take that business today. Even though all the millennials with money are interested in crypto, they don't have that much money compared to the baby boomers, who are not interested in crypto. Which leads us to the next question. What's the age group of the politicians? Say in the US Senate, 60 to 69 years old, second highest group 70 to 79, then is 50 to 59, 40 to 49, 80 plus, and 30 to 39 is nowhere to be seen. So the politicians of the Western world today are in an age demographic which, number one, don't own crypto, number two, don't understand it. They probably read that younger people are interested, but they don't have so much money, so they can afford to ignore them. But guess what's going to happen with time? Only two things are certain. Hold that thought, because first we'll review the current state of affairs with crypto regulation in both the US and in the European Union, which are the two main drivers. And then we'll go to the conclusion. And also today we're starting a new fun thing, Fan of the Day. Also, if you're one of these 74% who believe that the stock market is like gambling, make sure you subscribe, because then we'll learn to gamble better. It was really after the boom and bust of crypto in 2017-2018 that many countries around the world started to work for real on their regulatory frameworks for cryptocurrencies. So that was in this time period. Then in 2020 and 2021 we had the rise of DeFi and stablecoins. And then now in 2022 we had major collapses like the Terra Luna collapse. And all this really put the regulatory work on hyperdrive. I've actually never seen governments act so fast to create new regulations. If you saw my CBDC story yesterday, you see why. If we start with the US, I think the most striking thing is really how many different federal agencies that see themselves responsible to define regulation on crypto. The Securities and Exchange Commission, SEC, say that they consider most cryptocurrencies to be securities, and therefore exchanges and digital wallets and crypto companies will need to apply securities laws like other publicly traded companies. This includes disclosures and risk management and reporting and so on, just as if they had been handling stocks. I talked about the Ripple XRP versus SEC lawsuit in this video, and which implications the judgment will have on the entire blockchain ecosystem. The SEC and their chair Gary Gensler is the most active player in positioning themselves as the central authority overlooking the blockchain space. Gensler often speaks before Congress and requests more money to finance the SEC's crypto assets and cyber unit, and they doubled their size in May. This also brought up discussions if the SEC is missing out on other relevant work to do. They always talk about investor protection, alright? Okay, but where were they then when we actually needed them to see through Celsius and Voyager, which was really impossible to penetrate as an outsider? And this led now to billions of lost dollars for US investors. Instead, they've charged a lot of projects after the fact, like they did with Ripple. Like, hey you guys, you did wrong 8 years ago. Okay. And the chief complaint that many industry players have is that the SEC does not provide a clear regulatory framework, just saying things like that the vast majority of crypto tokens are securities. Okay, so which of the top 100 cryptos are securities then? That you won't get an answer to, even though the SEC has hundreds or thousands of regulatory experts and lawyers. But somehow a 19-year-old blockchain programmer is supposed to know the answer. The SEC won't tell him, but if he does wrong, they will sue him 3 or 5 or 8 years later and say that it was clear all along, you should have known better. Alright, I don't know, I'm just an engineer here, but this doesn't seem fair or constructive for innovation to me. Besides the SEC, the Commodities Futures Trading Commission, CFTC, also claims the right to be the major regulator of the crypto industry and fights for the approval of Congress. They attack the SEC's approach openly as an example of regulation by enforcement. And the CFTC has already made clear that they see Bitcoin and other cryptocurrencies as commodities and not as securities. And with their expertise, they see themselves as the right regulator for the digital asset commodity market. Then there is also the Financial Crimes Enforcement Network, FinCEN, that also want to have a say. They are focused on financial criminal activities like money laundering and terrorist financing. They don't consider cryptocurrencies to be legal tender, but as a tradable medium of exchange. Therefore, they see exchanges as money transmitters. Then the key here is the travel rule, which requires money transmitters to exchange information about the sender as well as the recipient for a transfer above a specific amount, a few K. Exchanges need to collect and submit information like name, national identity number, date of birth, and so on, and send that to the recipient. Regulations like these are already implemented in all big regulated exchanges in the US. You therefore have to go through a KYC process to identify yourself, or they will ask who is the holder of the wallet you transfer the assets to, at least if the value exceeds a specific amount. Then there is the White House framework, the first ever comprehensive framework for responsible development of digital assets, that came in mid-September. The government acknowledges the growth of the digital asset market and the need for a regulatory framework. And they talk about 6 key priorities: consumer and investor protection, financial stability, countering illicit finance, US leadership in the global financial system, financial inclusion, and responsible innovation. And the report urges the SEC as well as the CFTC to aggressively pursue investigations and enforcement actions against unlawful practices in the digital asset space, while the segregation of responsibilities between the two remains unanswered. The environmental impact of the digital assets is also still a main concern and repeatedly mentioned in this report. After China's mining shutdown in 2021, many miners moved to other countries around the world, while at least according to this site, it's not zero yet. 21% China. But many moved to the US, to crypto-friendly states like Texas or Kentucky. And we see that the US is now 37.8% according to this site. And Germany is listed as 3%, for example. Then there is this report from the White House from September 8. Climate and energy implications of crypto assets in the United States. With text like crypto assets can have significant environmental impacts and could compromise the carbon emission target. And they call for environmental performance standards for the blockchains. And while I do support Ethereum's transition from proof of work to proof of stake, The whole discussion about proof of work is completely misunderstood. They forget one thing, all of them, all the time. I talked in this video why, I link it below also so you can watch it after this one. Let's move on to the EU crypto regulation. The European Union is working on the regulation of the markets in crypto assets, MiCA. The proposal was introduced first in 2020 and is part of a digital finance reform that is meant to improve the competitiveness of the European fintech sector and technology innovations. Then halfway I feel it derailed into just trying to stop innovation instead. But the main goals are harmonize the EU market and create regulatory certainty, improve consumer protection, prevent fraud, and number 3, strengthen financial stability. Those are good goals. And the regulation will directly apply to all member states, and implementation in national laws are not needed. Therefore, getting regulatory approval in one EU country will allow companies to do business in all the other member states as well, which I think is absolutely necessary. So this is good. In late June, the EU agreed on a provisional version of the MiCA framework, and in mid-September the final draft of the proposal was finished so that it could go into Parliament vote within October. If it's approved by the EU Council and Parliament, the framework will be entering into force in 2024. Crypto policy expert Patrick Hansen has shared a lot of insights. Definitely follow him. He's now hired by Circle, which was really a great hire for them. MiCA aims to regulate every digital representation of value or rights, which are shared or stored using distributed ledger technology. And they've categorized the tokens into 3 types. Utility tokens, which provide digital access to a good or service, available on the DLT, and is only accepted by the issuer of that token. Asset reference token, that has the purpose to maintain a stable value by referring to the value of other assets. So something like DAI, I guess, should fall under this category. And then there's EMT, or e-money token, meant to be used as a means of exchange and maintains a stable value by referring to the value of a fiat currency that is legal tender. So centralized stablecoins like USDC or Circle's USDC would fall under this category. Then there is the CASPs, crypto asset service providers. They will have to maintain a lot of investor protection and AML, anti-money laundering requirements. Also, regulators will check for market manipulation and insider trading and so on. So exchanges will need to offer information like white papers about the tradable assets and inform about potential risks. They will also be liable for misleading content, and in the event of hacks or preventable operational failures, exchanges as well as wallet custodians can actually be liable here. The ban of proof of work that was discussed in June in MiCA draft is now officially off the table, but CASPs will have to publicize data regarding environmental impact. One thing that I asked Patrick about and that he clarified me, which was good news to me actually, is this. There will not be a centralized database for the whole EU or something, combining wallet addresses with person identity. Instead, each CASP will hold that information. Probably the strongest impact that MiCA will have will be on stablecoins. The collapse of Luna in May 2022, it led to so many billions of dollars of losses, and it raised concerns about the stability of decentralized stablecoins. Many restrictions are now defined for EMTs as well as ARTs, and they will need to come over a lot of regulatory hurdles to get approved. Stablecoins are for sure a direct threat to the euro, and the EU wants to ensure that stablecoins are fairly backed by actual euros or euro equivalents, and this I think will become a major topic. Now with interest rates above 0% again, a euro stablecoin will be easier to issue in large volume, and I think for that reason it will become a player. Notably, MiCA doesn't apply to NFTs that are genuinely unique and incapable of being traded with each other, to not choke the art sector. But I think issuing 10,000 similar NFTs and saying that they are all individual art pieces, I think it's not going to fly, guys. That's really very close to issuing a coin or something, but of course, I'm speculating here. Also, MiCA doesn't seem to apply to DeFi applications as long as they are really sufficiently decentralized and do not have any intermediary. This is quite different from the SEC approach. I think the biggest mistake in all the regulatory work being done right now is that it assumes everything is just about money. But there is a technology aspect here also. Blockchain can be used for something else. It's not only a speculative game. And this discussion is almost completely missing. There's a huge risk to stifle innovation across the board, even for things that doesn't have anything to do with buying or selling assets. Like our friend Per Granfalk said here at this EPP meeting in the European Union in Brussels, if the gaps that exist today in digitalizations are not dealt with, they will multiply due to the technological leap linked to blockchain and Web3. Everything connected to transactions and documentation on the internet will be based on this technology. Thank you. Like Per says here, this can be about verification of documentation for medical or construction purposes or whatever. Then there is also a second aspect that is largely overlooked. There is a risk to create crime as well if the regulations end up wrong. I explained that in this video letter to the EU. I spent almost the whole day yesterday on personal security, and as you may know, I don't hold any physical cryptocurrency in my personal capacity because of the physical risks. I hold it as price tracking certificates through my bank and through company ownership. This has major disadvantages, but the advantage is that there is then no point for violent criminals to try to extort me or something. For me, I have to think about this because I'm a public person. But if this goes wrong and this mapping between wallet addresses and individual people and their home addresses gets out of control and they start spreading on the internet, that would then risk creating a whole new wave of violent crime, and I don't really see this discussed if the objective here is to protect investors. But having said that, I think the regulatory work that is happening now is good for crypto because of the age gap and the lack of knowledge. Banks right now are uncertain what they can and cannot do. Can they even allow people to transfer money from a crypto exchange to their bank account? That's quite a big problem now in Sweden for many people, and in many other European countries as well. I think less so in the US because the banks there are more knowledgeable and can tell, criminal money apart from honest money. Here in Europe, I see a much bigger competence gap, and then everything seems just scary instead. Even when people have complete provable traceability and have paid all the taxes and done everything in the book. But banks are private companies. They are not required to take someone's business. Then, if they all start saying no thanks, that's a real problem. Now, I don't think it's going to end up there in the end because of what I talked about in the beginning. Their customers want to use crypto. Right now, the banks and the traditional financial institutions can afford to not care about this group and only serve old people with money, not young people with money. But sadly, old people will die. Then younger people will inherit that money. And as they get older and more experienced themselves, they get into more powerful positions in society. And they want to use crypto, and they understand it. We saw the statistics. And I'm not the only person who will come to this conclusion. I'm just early on the conclusion perhaps, but others will reach this conclusion as well. Just give them a little time. So I think the regulation will become reasonable. Because there is money to be made here, there are votes to be won here, and there is influence to be won here for the traditional financial sector, for the tax authorities of the world, and for the politicians themselves. Then why lose out on all that and send it someone else, to other countries or to the political opposition and let them win instead? I don't think that's going to happen. So I think regulations will be okay. That will make the old financial institutions comfortable again, what they can do and not do. They want the business already today because they've also read these reports I've shown. As I said, one of them is from Bank of America. They just don't want the business at the expense of getting fined by some authority for doing something wrong. And while it's unclear from the SEC and from all the other regulatory authorities in EU and the US what is wrong exactly, well, then that is a risk. So I think regulation will come out fine in the end, and it will be a catalyst for the next bull run. This review has made me more bullish on the long-term outlook of crypto. Not to be confused with the short-term price action, because if today's candle closes here at 18,300, that's not good, guys. So support breakdown is definitely looming today. But the candle hasn't closed yet. Let's see. Before we move into the fan of the day, what you can do here, take some action. Get involved with your elected representatives. Educate them about the opportunity. Educate them about the fact that practically all their wealthy young voters are positive to this. So if they want to win the next election, perhaps they should take a positive stance, at least not shut it down. We live in a democracy after all. Then getting elected matters. And in the US, politicians also tend to care about donations, if I understand the system right. And crypto is truly inclusive. Even if only caring about skin color and ethnicity in the US, the minorities are overrepresented. And internationally, for the first time, everyone in all the countries of the world have exactly the same opportunity. Suddenly it doesn't matter what country you were born in, your dad was rich or poor, you all have the same access to the same investments. All politicians say they care about inclusion. Okay, then show it. Now it's time for the fan of the day. And the winner is Staltus ES. I'm sorry if I butcher your name, and I don't know is ES if it stands for España or if it's something else. Incredibly kind words about quality productions. Thank you for mentioning that. Then we're two people who care. I think what I like the most is I don't hear the drive for vast riches and fortunes at all costs. You're interested in smelling the roses in life as you go. Exactly. I've lived in some very poor countries, and if you don't have any money at all, money is insanely important. If you don't have money for medical expenses for your children, or you don't have money for food, or you don't have money for shelter, money becomes everything. But if you have enough, it doesn't really matter. It's more of a fun game. If you have enough that you can buy your own time, that is very valuable in today's society, I think. But beyond that, it doesn't really matter. Trustworthy individual, thank you, sir. Ngop, how much did we pay this guy to write this?
10 Bitcoin.
10 Bitcoins only. Totally worth it. We're recording. If you want to be featured as fan of the day, write a comment and subscribe. Thank you, tack. Sitter och Larsen out. Hej då!